Have you ever wondered how a family that almost no one talks about anymore managed to shape global finance long before the Morgans were even part of the conversation? Not through brute force, not through royal blood, but through a hidden pattern of strategy, timing, and geopolitical leverage that most historians still fail to connect. When we look at financial history, the same names rise to the surface, yet beneath them lies a dynasty that understood something critical. Power is not about visibility, it is about architecture. And the earliest architects of true financial influence were not the ones taught in school, but the ones who built systems designed to outlive their own legacy. Imagine a world where the rules of trade were chaotic, currencies unstable, and empires desperate for control. In that landscape, this forgotten family identified a structural flaw in the global system and exploited it with precision. They recognized that wealth did not flow to those who merely held assets, but to those who controlled the movement of value itself. Their rise was not accidental. It was engineered through strategic positioning across ports, corridors of influence, and financial channels that were beginning to emerge in a world struggling to define economic order. And here is the unsettling part. The patterns they mastered still influence modern finance, not because of their name, but because of the frameworks they created, the same frameworks that later families adopted, perfected, and took credit for. What you're about to see across this video is not just history, but a blueprint of how economic power is built, transferred, hidden, and reused across centuries. You may even recognize shadows of these strategies in current crises, debt structures, global trade conflicts, and the silent mechanisms that determine which nations rise or fall. The truth is that once you understand the foundation of this forgotten empire, you begin to see that nothing in global finance happens by accident. It happens by pattern. Before we continue, share your thoughts in the comments. What do you know about the families who shaped financial history behind the scenes? Understanding this content helps you see the bigger picture, so make sure to like this video and check whether you are already subscribed to the channel. What comes next might challenge everything you thought you understood about who truly controls economic power, and this is only the beginning of the story. To understand how this forgotten family rose to financial dominance, you first need to see the world as it existed before modern banking, before global markets, before any standardized system gave nations a predictable way to move wealth. It was a financial frontier, a landscape defined by fragmented currencies, unreliable trade routes, and empires competing for survival rather than prosperity. In this environment, economic power wasn't measured by GDP or central bank reserves. It was measured by who could navigate the volatility, who could interpret political fractures as opportunities, and who could turn instability into leverage while others saw chaos. This was an era when merchants operated as intelligence networks, when trade agencies acted as shadow governments, and when the border between legal commerce and geopolitical influence was blurry by design. Empires depended on private actors to secure their interests abroad, because no government alone had the reach, the speed, or the adaptability to manage the complexity of global trade. And while most merchant families functioned as small cogs in this machine, this particular dynasty perceived something far deeper. They understood that the real power was not in the goods themselves, but in the systems surrounding them: logistics, credit, maritime influence, supply chains, and the unspoken authority that came from controlling what others relied on to operate. The geopolitical world was shifting rapidly. Nations were fighting for access to resources, ports, and strategic territories, but the hidden battlefield was financial. Trade imbalances, debt negotiations, and the silent movement of capital dictated the fate of empires far more than battles on land. This family read those signals long before others did. While governments were focused on military strength, they were building infrastructure that transcended borders, creating financial arteries that nations would depend on without realizing the long-term consequences. Their ascent wasn't driven by luck. It came from recognizing a crucial truth about emerging global economics. Systems of exchange are more powerful than any single product within them. Whoever builds the system defines the rules, and whoever defines the rules influences not only markets, but the political order itself. What appeared to be simple commerce was actually the early blueprint of a financial empire, engineered with precision, subtlety, and an understanding of global patterns that most of their contemporaries couldn't even see forming. As those patterns solidified, opportunities the world thought were random began aligning perfectly for them, revealing how deeply they understood the mechanics of power long before that word ever belonged to modern finance. What makes the origin of this family so remarkable is not simply where they began, but how clearly they recognized that economic vulnerability could become a generational advantage. They started in an environment marked by instability, where political pressure, discrimination, and financial uncertainty forced them to develop a level of adaptability that most established elites never needed. While others relied on inherited privilege or government protection, This family relied on observation, resourcefulness, and the ability to read patterns that were still invisible to the world around them. Their early movements reveal something essential about how financial empires are built. Opportunity rarely appears as a moment of abundance. It appears as a moment of imbalance. When economies fluctuate, when governments make desperate decisions, and when trade routes shift unexpectedly, those who understand the deeper mechanics do not retreat. They position themselves at the fault lines. And that is exactly what this family did. They watched as empires weakened under their own weight. They saw nations expand faster than they could stabilize. They recognized the gaps forming between economic ambition and actual capability. Instead of fearing these gaps, they stepped into them. They understood that in periods where institutions fail to uphold order, private actors can create their own systems. This insight became their foundation. Their first strategic decisions were not about controlling products or territories. They were about controlling predictability. They offered stability where governments could not deliver it. They provided financing where regional banks were unreliable. They moved goods where bureaucracies were slow, and in doing so, they became indispensable to both merchants and officials, who relied on their efficiency to maintain power. What set them apart was not wealth, but vision. They realized that influence is accumulated in small, precise steps long before it is recognized publicly. They built networks based on trust, negotiation, and the ability to solve problems that no formal institution was equipped to handle. Every weakness in the global structure became an opening. Every crisis became a test of their ability to adapt and expand their reach. And the more they responded to these challenges, the more essential they became to the economic engine of an emerging world. Their rise did not happen through dramatic moments or sudden shifts. It happened through subtle positioning, through the quiet construction of relationships, and through recognizing that those who understand the system beneath the surface are the ones who eventually influence everything above it. And as the century unfolded, these early choices would evolve into a financial architecture capable of reshaping global power. As their influence expanded, the family began constructing something far more sophisticated than a commercial network. They were designing an invisible architecture of power, a structure built from relationships, leverage, and access, not monuments or public institutions. Their empire did not depend on armies or political titles. It depended on information, mobility, and the ability to move value across borders faster and more reliably than governments could. In an era when communication was slow and international law barely existed, this gave them an advantage that no ruling class fully grasped until it was too late. Their strategy relied on embedding themselves within multiple layers of the global system. They partnered with regional leaders who needed financing, with merchants who needed security, and with colonial administrators who needed someone capable of doing what official channels could not. They became the connective tissue between worlds that did not trust each other, operating as brokers of stability in a time defined by uncertainty. And because they solved the problems that governments struggled to handle, they were granted access that transcended borders and political tensions. But their greatest asset was their ability to engineer interdependence. They understood that true power emerges when others cannot function without you. By controlling the flow of goods, credit, and logistical infrastructure, they quietly made themselves indispensable. Ports that once struggled to support trade now relied on their systems. Entire routes adjusted according to their decisions. Even rival empires, suspicious of each other's intentions, found themselves depending on the efficiency of this family's operations simply to sustain their own economic goals. Their influence was not loud. It was structural. It lived in the spaces where paperwork was incomplete, where treaties were vague, and where economics moved faster than politics. With every new alliance, they deepened their hold on the emerging financial ecosystem, shaping patterns that modern institutions would later formalize. What appeared to be opportunistic business decisions were actually components of an architectural blueprint they had been assembling piece by piece. And this is where their story becomes more than a historical footnote. Because the systems that rose from their work would later define banking, credit, global trade, and the very mechanics that still underpin international finance. Their empire was not built to dominate a single region. It was built to influence the world through the quiet engineering of economic dependencies that nations themselves struggled to understand. Before we move on, share your perspective in the comments. What part of this hidden architecture of power surprises you the most, and why? The deeper you examine their strategies, the clearer it becomes that this family understood something revolutionary for their time. Debt was not a burden. Debt was a weapon. While most merchants and governments treated borrowing as a temporary solution to immediate problems, this family recognized that debt could be transformed into a mechanism of long-term influence. Whoever controlled the flow of credit controlled the decisions of those who depended on it. And in a world where currencies fluctuated wildly and trust between states was fragile, Credit became more valuable than gold. Their breakthrough lay in redefining what a loan actually meant. Instead of viewing debt as a simple financial agreement, they viewed it as a structural relationship. When a regional ruler or trading authority borrowed from them, it wasn't just capital being exchanged, it was leverage, access, and future dependency. Once a government relied on their financing to sustain trade, stabilize ports, or manage crises, the government could no longer operate independently. The family had effectively embedded themselves into the political and economic fabric of the region without ever holding an official title. They also recognized that risk itself could be engineered. By spreading credit across multiple territories and industries, they created an ecosystem in which their loans supported one another. If one sector faltered, another compensated. If one route was disrupted, their diversified network absorbed the shock. This resilience made them the preferred creditors even for powerful institutions, because borrowing from them meant borrowing from a structure that could withstand volatility far better than any state treasury of the era. What truly set them apart, however, was how they used information to amplify the power of debt. They monitored trade flows, political shifts, emerging conflicts, and subtle changes in supply and demand with extraordinary precision. This allowed them to adjust terms strategically, lending when influence could be gained and pulling back when instability could be exploited. They were not reacting to the world, they were forecasting it. In many cases, they knew a region's financial future before its own leaders understood the consequences of their decisions. This system of engineered debt eventually became a prototype for global financial institutions that would rise centuries later. But long before central banks or international lenders formalized these methods, this family was already testing and refining them on a scale that few recognized. Debt in their hands was not a liability. It was the architecture of power itself, a quiet force shaping alliances, trade patterns, and the economic hierarchy that would define entire eras. As their financial network matured, the family's influence began to stretch far beyond the regions where they operated. What started as a strategic foothold evolved into an international presence that intertwined with the economic ambitions of empires. Their expansion was not marked by dramatic conquest, but by a series of calculated moves that placed them at the center of global trade flows. They understood earlier than anyone that influence was not limited by geography. It followed the movement of capital, and capital always flowed toward efficiency, stability, and trust. They provided all three. Their operations became essential to governments struggling to manage expanding territories. Colonial powers needed reliable intermediaries to stabilize trade routes, safeguard revenue, and maintain the illusion of order in regions they barely controlled. The family stepped into this vacuum with a precision that made them indispensable. They financed infrastructure without tying it to ideological goals. They negotiated with local leaders in ways diplomats could not. They facilitated communication between trading hubs that had no formal channels of cooperation. In effect, they created an unofficial backbone for global commerce long before nations realized how dependent they had become on it. Their reach expanded not through force, but through competence. When a crisis disrupted a major port, they were the first to restore activity. When currency fluctuations destabilized a region, their credit stabilized it. When merchants lost confidence in bureaucratic systems, the family's structure offered reliability. Because they operated above the political fray, they became the neutral ground everyone trusted. And neutrality, in a world fractured by rival empires, was a currency of its own. But their expansion also revealed something deeper. They were not merely reacting to shifts in global economics, they were shaping them. By choosing where to allocate capital, they redirected trade patterns. By deciding which regions received financing, they influenced which cities rose and which declined. Their decisions could elevate a port to prominence or quietly suffocate its relevance. The flow of goods and money followed their architecture, not the other way around. And governments gradually realized that the systems they believed they controlled were, in practice, being steered by private actors who understood global mechanics far better than state officials. As their influence crossed borders, it became clear that they had achieved something few families in history ever accomplished. They were operating not within the global system, but above it. Their reach was no longer defined by territory or allegiance. It was defined by the interconnected dependencies they had built, dependencies powerful enough to shape the geopolitical landscape and subtle enough to remain invisible to most observers. Now, what history rarely acknowledges is how deeply this family influenced the early blueprint of modern finance. Their alliances were not simple partnerships, but strategic arrangements designed to shape emerging economic systems. From the inside, they aligned themselves with regional powers who needed liquidity, with merchants who needed stability, and with political authorities who needed discrete intermediaries capable of moving capital across contested borders. These relationships were crafted with precision, built not on loyalty, but on mutual dependence. Every connection strengthened the family's position while quietly reshaping the financial landscape around them. Their methods revealed an advanced understanding of leverage long before financial theory gave the concept a name. They knew how to negotiate terms that positioned them as perpetual beneficiaries. They recognized that offering short-term relief in unstable regions created long-term reliance. Their influence seeped into legal structures, trade agreements, and even the informal rules that governed international exchange. In many regions, their guidance carried more weight than official regulations because their systems worked when state mechanisms did not. Perhaps the most revealing aspect of their rise is how effectively they navigated political contradictions. They could support competing empires simultaneously without compromising their standing in either. They became advisors to authorities who distrusted one another and financiers to merchants operating in rival markets. Their neutrality was not ideological, it was strategic. It allowed them to operate above political disputes, to remain indispensable regardless of shifting alliances. And because they were not tied to a single nation, their influence persisted even when governments collapsed or borders changed. Over time, the structures they built became the prototypes for institutional frameworks that define today's global economy. The multi-layered networks of credit, the integration of trade and finance, the reliance on private intermediaries to stabilize markets, all of these mechanisms trace their origins back to families like this one, though history rarely credits them. Their role remained hidden because it was never meant to be celebrated. It was meant to be effective. Yet their impact is undeniable. They helped create a world where financial systems could override political boundaries, where private entities could influence the fate of nations, and where economic architecture became as powerful as any military force. And understanding these hidden contributions is essential to understanding how modern financial power truly operates. Share your thoughts in the comments. Which part of this quiet influence do you think shaped the modern world the most, and why? As their influence deepened and their network spanned continents, something unusual began to happen. The family that once operated visibly within commercial hubs gradually withdrew from public prominence. This decline was not the result of failure or external pressure. It was a deliberate strategy, a calculated retreat designed to preserve the power they had built while diffusing a tension that could threaten it. When financial systems matured and institutions grew more formalized, they recognized that maintaining influence required a different posture. Visibility had served its purpose. Now, discretion would ensure longevity. Their withdrawal coincided with the rise of emerging banking dynasties and governmental structures that were beginning to centralize control over credit, trade, and monetary policy. Instead of competing for public recognition or institutional authority, the family shifted into roles that were quieter but no less significant. They moved capital through intermediaries, diversified into industries that masked their direct influence, and established networks that could function without their names attached to every transaction. What looked like a disappearance was actually a transformation, a repositioning that allowed them to shape outcomes from a distance. This strategic decline also reflected a deep understanding of political risk. As nations strengthened their regulatory frameworks and sought to assert greater control over international finance, the environment became less hospitable to private entities operating at the scale the family had achieved. Public prominence would have made them a target for new policies or national interests eager to reclaim authority. By stepping back, they avoided becoming symbols of foreign influence or economic dominance, and by decentralizing their activities, they made their operations resilient to political shifts that dismantled many contemporaries. Yet the traces of their influence remained embedded within the global system. The financial techniques they pioneered were now being adopted by banks, government agencies, and emerging institutions that unknowingly relied on their earlier innovations. Ports they had developed continued thriving. Credit mechanisms they engineered evolved into foundational components of modern banking. Trade networks they established became permanent trade corridors. Their legacy was no longer tied to their name. It lived in the infrastructure of a global finance itself. This is why their decline never felt like an ending. It felt like a transition into a world they had helped design, one where the structures they built could operate independently of the architects who created them. And as newer financial families rose to prominence, they often did so on top of systems this earlier dynasty had shaped, systems that still bore the unmistakable imprint of the hidden empire that had come before. What remains most striking about this family's legacy is how deeply their influence is woven into the foundations of modern financial systems. Even after their public presence faded, the structures they pioneered continued shaping the behavior of markets, institutions, and governments. Their innovations were absorbed into the global economy so completely that most people today use mechanisms they designed without ever realizing their origin. The logic of interconnected credit networks, the strategic placement of trade corridors, the reliance on private intermediaries to stabilize economic flows, all of these elements still echo the blueprint they created long before international finance had a name. Their understanding of risk distribution became the prototype for diversified banking portfolios. Their approach to cross-border lending anticipated the future role of multinational institutions. Their mastery of information asymmetry, gathering intelligence through commercial channels rather than political ones, foreshadowed the modern integration of data into financial strategy. Even the idea that a private network could be more efficient and reliable than a state apparatus reflects the principles they operated under, principles that now guide entire sectors of global trade and monetary policy. Yet the most enduring part of their legacy is the way they demonstrated that economic power can function without formal authority. They proved that influence does not require governing a territory or holding an official title. It requires shaping the systems others must operate within. By controlling the flow of value, by stabilizing regions when governments faltered, and by embedding themselves within the infrastructure of commerce, they created a model of power that transcended national borders. Today, multinational corporations, global banks, and financial consortiums replicate this approach, often unknowingly repeating strategies the family pioneered generations ago. Their imprint can be seen in geopolitical dynamics as well. The rise and fall of trade hubs, the shifting balance of economic alliances, and the dependence of nations on international credit all reflect patterns they helped establish. Modern states negotiate within frameworks shaped by private influence, often assuming these frameworks emerged organically rather than through deliberate engineering. But the truth is that many of the systems we now consider natural features of global finance were, at their inception, tools crafted by a family that understood how to leverage complexity long before the world realized it needed structure. And while history credits larger, more public financial families for shaping the modern era, the quieter predecessors who built the underlying architecture remain largely unacknowledged. Yet their influence lives on every time a nation restructures debt, every time capital flows across borders, and every time a government depends on private networks to stabilize its economy. Their legacy persists in the hidden frameworks that still govern the movement of wealth. When you look at the modern financial world, it becomes clear that the structures we rely on today did not emerge from orderly planning or official institutions. They evolved from centuries of experimentation carried out by private actors who understood that real power moves in silence. And among those early architects, this family stands out not because their name survived, but because their ideas did. They demonstrated that influence grows through systems, not symbols, and that the most enduring empires are the ones built beneath the surface rather than on top of it. Their framework shaped how trade connects nations, how credit binds governments, and how economic strategy can operate independently of political control. Even now, the echoes of their architecture guide decisions made in boardrooms, central banks, and international negotiations across the world. Understanding their legacy helps reveal why certain patterns repeat themselves throughout history. Nations rise when they align with the underlying logic of global systems. They decline when they ignore it. And those who learn to read the structure behind the structure, as this family once did, gain the ability to see not just what is happening, but why it is happening. Their influence may no longer be visible, but the world they helped create still functions according to their design. The language of finance, the movement of capital, the hidden dependencies between economies, all of it carries traces of their quiet engineering. And if you have followed this journey to this point, you have already noticed that understanding these hidden foundations changes the way everything else appears. It becomes easier to recognize how economic power forms, how it shifts, and how it shapes the future long before the public ever notices. This story is not just about a family. It is about the blueprint they left behind, and the way it continues to define the global order that surrounds us. If this exploration gave you new insight into how financial empires are truly built, feel free to subscribe so you do not miss the next chapters in this series. And if you reach the end of this journey with me, leave a comment saying, "This message was for me, so I know you were here for the full story." A like on the video also helps carry this conversation forward in a meaningful way. And if you want to keep expanding your understanding, there's another video right here that continues this line of thinking. Just click and follow the thread to the next piece of the puzzle.